People in, so let's get started. We'd like to welcome everybody to today's virtual chat between myself, Yulin Lee, and Ian Armstrong of ComplyAdvantage. We're going to talk about some of the findings from both ComplyAdvantage's recent report on the state of financial crime and how those learnings relate to Onfido's recent identity fraud report. We'll also discuss key strategies you can take to protect yourself and your business from fraud, as well as some of the recent regulatory compliance standards issued to protect you against anti-corruption, money laundering, and the like. So by way of introduction, I'm Yulin Lee. I am the Chief Product Officer at Onfido, and I'm joined by Ian from ComplyAdvantage. Ian, would you like to introduce yourself?
Yeah, absolutely. Thanks, Yulin. And thanks everyone for joining today. I can see the number of participants ticking up a little bit there. So a quick moment to explain who I am. So my name's Ian Armstrong. I've worked in the financial services industry and in the financial crime space for a little over 20 years, about 22 years, I think. I started out in the enforcement division of the UK regulator, moved on to some of the UK's biggest banks, and about 7 or 8 years ago, I increasingly found myself working at the intersection, if you like, of technology and risk, and that led to me wanting to do more in the fintech space, which I did for a number of years, and that ultimately led to me joining ComplyAdvantage. So really pleased to be here today.
Fantastic. Well, thank you very much for that. Let's jump into some of the key findings from the State of Financial Crime report. What were they?
Yeah, well, I should say it's a 100-page report. You can download it for free from our website, and I'll explain a little bit about how we produce the report to preface my answer to that question. So we first go out and conduct a survey with around 600 senior executives in financial services companies all over the world. So they answer a detailed questionnaire about what are the things that are keeping them up at night in terms of financial crime, what trends they've seen developing. And alongside that, we also surveyed a few thousand consumers. Everyday users of financial services, just to see if there's any sort of divergence, I guess, between the things that concern them and the things that concern the C-suite. We then look at the results of all of these surveys and they kind of overlay it with our own observations about what we're seeing and our kind of commentary about the year ahead. So that's a report. It's kind of divided into 4 areas, which are things like regulatory themes. So that would cover things like artificial intelligence, public-private partnerships, sanction circumvention. Then we have a section about regional trends, one on geopolitics, and the whole thing is framed by our own spotlight on financial crime. So there's obviously way too much there for me to cover in this session. So I was thinking I'd zoom in on a couple of key areas, maybe starting with this one that you're looking at here. So it's an area of financial crime which I think both you and I, Yulin, are highly motivated to combat, which is fraud. Now, a recurring theme that we often come back to when we do these exercises is how the digital age has revolutionized how we manage our finances. So as consumers, it's given us this fantastic convenience and speed, but it's also created opportunities for financial criminals. And the consumer survey showed this slightly disconcerting reality, probably not surprising, but 89% of consumers have expressed concerns about falling victim to fraud. And obviously, as I say, that's not surprising because of the number of news headlines that we constantly see about fraud taking place and people falling victim. There was this kind of interesting generational nuance that we noticed, where the anxiety is felt most keenly at the oldest and the youngest ends. So in other words, these sorts of Gen X cohort and the millennial cohort were less concerned about fraud than the Gen Zs and the baby boomers. And the observation there is probably with the younger demographics, they've grown up in a digital world. They're very comfortable with online activity, online transactions, but perhaps they often prioritize ease of use over really robust security measures, and they're obviously enthusiastic users of social media, and that can make them vulnerable to being targeted for online scams. And for those established generations, let's call them, while they might adopt digital tools at a slower pace, they tend to be a little bit more susceptible to traditional fraud methods like credit card scams and where I cut my teeth, sort of phone-based fraud attempts, things like investment fraud. So if we just move on to the next slide, I'll talk a little bit more about what we sort of see from the perspective of looking at all the results in this report, and these, particularly the consumer anxiety. So we see, and apologies for this slightly alarmist slide, but we see this kind of perfect storm of different factors converging in the coming years to create this really attractive environment for fraudsters. And what I mean by that perfect storm is the rapid adoption of real-time payments. So both domestically and across borders, this presents fantastic opportunities for fraudsters to exploit the speed and the potential anonymity of these transactions. So you got to remember, I mean, one of the key sources of friction for fraudsters back when I started looking at investment fraud was the length of time it took to for a payment to travel from X to Y. And that actually afforded banks the opportunity to sort of intervene. So perhaps if a payment was being sent overseas and the bank got wind that their customer had fallen victim, there was a bit of a gap which allowed them to go and contact the other bank and say, look, you know, these funds are in transit essentially, please stop them and freeze them when they arrive. This sort of world of real-time payments makes that a lot more difficult. The second element of this perfect storm is open banking and the emergence of that. It has this tremendous potential, which hasn't yet really been realized. It really, obviously, it kind of fosters innovation, but it does introduce, I'd say, like new complexities and vulnerabilities into the financial ecosystem. It kind of introduces these new points where fraudsters can attack, if you like. Not to mention the fact that it sort of opens up third-party access to financial data, and that brings with it security concerns. And then the third element, which we're going to talk a lot about today, is this meteoric rise of artificial intelligence, and how we see fraudsters increasingly using that technology to create these really hyper-targeted scams. And that allows them to sort of personalize the way they're targeting individuals, but also obviously the digital age means that they can do things on this sort of industrial scale relatively easy. So yeah, this is what we've seen on the fraud space. How about from your side, Julian?
That's fascinating, really fascinating data, and seeing fraud from a different angle. So at Onfido, from our perspective, we work with many clients on identifying their end users through a combination of things like their documents, their biometrics, other signals. And what we are also seeing quite similar trends when it comes to fraud. So we've definitely seen a year-on-year increase in document manipulation, which is the alteration of documents or the images on documents. And this happens globally. It's not really just one small group of people, on global customers, though with some fluctuations through the day, depending on where they are, of course, because globally fraudsters operate 24/7, but there are patterns on how they operate within geos. And we're also seeing a very big increase in biometrics fraud, much more last year than any other year. And I think this comes from the just greater use of biometrics, as well as people have got used to biometrics to open things, access things, and of course, like the on-device biometrics has helped take biometrics from something that I think was not so commonly used to something that people are literally using 20, 50, 100 times a day. So the fraud rate is higher this year than any year to date. But I think the biggest change, as you just touched upon, Ian, is to do with AI, and hence the ability to produce very more sophisticated frauds at a scale that wasn't so easy to achieve before or at all. So we are seeing a surge in what we call deep fakes and cheap fakes. So cheap fakes are just less good deep fakes. And because of these availability and the access to these AI generating online tools, your fraudsters who are highly motivated are able to use these tools to their benefit and create things at a scale, and come at systems in a greater scale as well. So in terms of pure numbers, we've seen a 3,000% increase in deepfakes of the system year on year. And this really kind of coincided with the availability of these Gen AI tools on the market. As you can probably imagine, fraudsters are very early adopters of all of these tools and then use these to kind of understand where the vulnerabilities are or who are or who aren't using what types of defense, which is what we'll talk a bit about later. So there are different types of deepfakes. The most common ones that we actually see in production are either computer-generated images and face swaps. So computer-generated images are generated entirely by generative models, and they have been trained to produce very realistic images of faces like the ones you see here. So if you look at the two images at the bottom, right, which are, if you see the progression from 2019 to 20 to the ones now, and whether seen by us in production or you've probably seen lots of examples of people posting this on the internet, they are hyper realistic and much sophisticated, and these can be generated for hardly any money very quickly market. And then the other one, which is face swaps, which is the kind of manipulation that's most associated with the term deepfake itself. So in a face swap, a person's face in an image or video is replaced with another person's face. And this can be achieved in the easiest way by doing something really simple, like a cut and paste, using tools like Photoshop. But that actually requires quite a poor quality deepfake, more of a cheap fake. However, now fraudsters are using more sophisticated techniques, and in the last couple of weeks, even, you've seen a lot of news about these new models that can generate even videos, and those can morph and blend the face onto the target, so the results look so much more natural. And then these face swaps are becoming increasingly sophisticated that actually they are very, very difficult to spot, even by trained experts. And using some of these examples, actually, you can see, I mean, these are slightly more examples to really show a point, but if you see what's happening in production, they're much more like the faces we were seeing before, extremely high quality. So yeah, that's from our side. I know there's a lot of talk about deepfakes and AI, but it is something that genuinely is now quite readily available in the market. I'd love to hear the ComplyAdvantage perspective on the AI that you hinted upon earlier as well.
Yeah, thank you. So it's just amazing watching that. And as you kind of alluded to, it feels like at the moment, like every week, there's some sort of new development that you know, is pushing us forwards in this space. I think there's a term that I've heard used before, the uncanny valley, which is, you know, when you create a sort of artificial image, historically, there'd be this sort of thing in the back of your brain that kind of told you that it wasn't real. And it now feels like we've gone way beyond that. So yeah, it's scary stuff. As we say, we're sort of in this rapidly evolving landscape. And in that landscape, what we see is financial institutions really feeling the pressure to find more effective and efficient ways to combat financial crime. So in our survey, about 50% of the compliance leaders that we spoke to indicated that they plan to enhance their approach to anti-money laundering by spending on new technologies or new capabilities. And there was a notable move away from the sense that you can combat or you can manage your financial crime risk just by adding bodies to your operational function. Obviously, increasing headcount often seems like a straightforward solution, sometimes the quickest solution, but longer term, it's often not the most cost-effective approach. And this is where machine learning and AI can come into play, because where we can use this same technology, you know, that as we've said, criminals and fraudsters are using as a weapon, we can start to use it as a shield, or think about how to use it as a shield. And some of the ways that we see a lot of inquiries about doing that are around how you monitor transactions. So we're talking about adapting to changing behaviors in real time. So this is where AI, unlike a kind of static rule-based system, AI-driven transaction monitoring systems can learn and adjust in real time, and that can kind of allow you to stay ahead of emerging risks. And machine learning algorithms can sort of analyze historical transaction data to identify trends associated with activities that are both legitimate and suspicious. And this allows you to kind of have these models that dynamically update their understanding of criminal behaviors. Another way is identifying relationships that you didn't previously know about. So in addition to just tracking changes in behavior, pattern recognition in AI-driven solutions can expose connections within the extremely intricate network of financial transactions. And using things like graph-based representation, AI algorithms can analyze transaction nodes and entity links to identify these clusters of activities and unusual connections, which is quite an important thing to have in your arsenal if you're a bank, particularly if you're serving across borders. If you can actually sort of see patterns of identity clusters within your customer base, and you operate internationally. Certainly in my own career, I've seen times when that type of technology would have been really, really powerful. I think it's just to kind of come back to what I was saying about this isn't all about machine learning though. So it's important to note that machine learning doesn't replace the rule-based world of transaction monitoring. It should really be complementing them, because rules are things that can actually provide that sort of foundational knowledge of customer behavior that you can then sort of feed into your machine learning models. So there should be a sort of symbiotic relationship between your kind of rule-based approach and your machine learning-based approach. There are a couple of other things I'll just say on the survey, which we found really surprising. A sort of divergence between how C-suite individuals in financial institutions see this use of AI, and between that and how consumers perceive it. So the financial professionals all see AI as this very powerful tool for fraud detection and prevention, that they want to be using more and more. What we saw on the consumer sides were actually really significant concerns about the transparency of its usage, the potential biases in the models, the accountability, who is actually responsible if the models don't work. So I think it really stood out, this sort of divergence of opinion. And so we're currently really pushing the view that executives in financial services firms really do need to think about how they're going to educate their customers, to sort of help to bridge that gap and to build trust. And I suspect that what we'll eventually see is firms, certainly the bigger banks, launching these kind of educational programs, if you like. You know how these days a lot of banks send out communications about fraud and sort of warning their customers about different fraud typologies. I think eventually we'll see firms sending out educational content about how they use artificial intelligence. And so if we kick on to the next slide, I think yes, that's the demonstration of people versus robot. So yeah, as we've been thinking about AI-driven financial crime and what we wanted to say about it, I came across this report that talked about how audio deepfakes are now one of the most popular tools used to spread disinformation designed to influence politics. And there's some really high-profile cases over the last half year or so involving audio deepfakes of Barack Obama, Keir Starmer, the Labour leader here in the UK, and the most recent one was Sadiq Khan, who's the mayor of London. So that allows me to segue for a couple of minutes into a more general anxiety that we saw in our survey around politically exposed persons, and the fact that 2024 is going to see more people voting in elections than ever before in human history. And so the issue there, from the perspective of a financial institution, is how do you ensure what's sometimes called election readiness or election preparedness? So what that is really is it's looking down the barrel of 2024 and saying, well, if the overall population of politically exposed persons, or PEPs, goes through this really significant shift where you see completely new PEPs appearing, as well as current PEPs kind of leaving politics altogether, if you're an institution that potentially has millions of customers, again, even more so if you operate across borders, how can you make sure that you're tracking that and you have decent visibility of who your PEP customers are? Because obviously, certainly in many parts of the world, there is a baked-in legal requirement to understand which of your customers are PEPs. And so this is about the effective management of that risk. Interestingly enough, and I don't want to preempt you here, Yulin, but obviously identity verification is a really, really critical part of that. So obviously, the best KYC processes that I've seen, involve pulling an individual's name directly from a government issued identity document, rather than allowing the user to enter that name in themselves. It's sort of amazing to me that there are still firms who use services like Onfido but aren't actually pulling the name that way. As soon as you allow users to type their own names in, you sort of open up to potential kind of fat thumb errors. But anyway, once you've got that name, hopefully from directly extracted from a government issued ID document, you have to screen it. And this is the last observation I'll make about this, is that we saw in our survey there are quite a lot of firms out there that are still relying on sort of semi-manual processes for doing that screening. But we found that 73% of respondents, I should say, reported that this scope of election overhaul in 2024 was prompting them to reduce their reliance on those manual processes. So I'll hand it back to you at this point, Yulin.
Yeah, that's really interesting, and we definitely see that as a use case that our clients have on our side as well, which I think we internally call remediation, and just making sure that actually your KYC and AML is fresh and up to date and isn't something that was done 10 years ago or what else, both on the identity side as well as the PEPs and sanctions side as stands. So, gosh, well, we've quite painted a quite interesting but bleak picture. So what are people out there doing, and what can you do to protect yourself? So I think at Onfido, our focus is very much on the user's real identity, and what you can do to confirm that this person is who they say they are and that they are there and they're not being impersonated. And so we recommend a layered approach to protect our customers against AI-generated fraud and deepfakes. And there are multiple pieces to this. So clearly one is stopping deepfakes at source by mitigating injection attacks. This is a high value and also quite pretty complex thing, which we've built now into all of our products, and it's something that you also need to keep updating as well as these methods adapt. We're also making it harder for fraudsters to create deepfakes by incentivizing them to use active solutions. And for example, Motion, which is our biometrics product where you have to move your face, is obviously harder to create. And then actually underneath that, we also do known faces. Have we seen this face before for this client, and so on. So having to constantly change all of this clearly increases the cost for the fraudster. And then we're continuously enhancing our AI technology as well, and making it more robust at detecting deepfakes. I think, as we said earlier, the human eye is now not the best suited to actually really analyze some of the more sophisticated stuff that's out there. Computers, though, look at things in a very different light, and can pick up some of the patterns, backgrounds, repeat things, and pixels even, which is more difficult to be able to create at scale. And whilst we've seen this like staggering rise in deepfakes, current legislation only prevents their use for nefarious purposes. Clearly, fraud has its own piece with a regarding like detection. However, it doesn't actually have anything about their generation. And in some ways, this is a good thing. Criminals aren't going to comply with prohibitions in law anyway. But it does mean that companies like ours, though, we need to be able to prevent and detect with the same kind of tools that they have to generate as well. And we need, which in this situation means that we need to be able to create our own deepfakes to ensure that our fraud detection is constantly at the cutting edge of capability, and that as new technologies roll out, we also understand how to use them, what the limitations are, and what the blind spots are, and so on. And there is a huge opportunity, though, for law enforcement to benefit from this type of fraud detection technology to support tackling fraud actually at the root rather than at the point of attempt. But there are still so many open-ended questions, establishing a potential standard for AI-delivered technologies, having the right reporting in place, that clearly there's still a lot of moving parts here, and we don't have the final legislative piece on where this will stand. And on the topic of legislation, actually, we're seeing a lot of legislation, both in this fraud and AI side, and also in, which we're going to move on to now, this harmonization, attempts to harmonize KYC and CDD requirements through the AML directive and the EBA guidelines across Europe. So this is for remote customer onboarding, for customer identification and mitigating the impact of fraud. And this will then set a minimum standard across geographies, share risk portfolios, especially around like the high risk third countries, and it will allow regulated entities to become more intelligent customers of third-party services and how they facilitate KYC checks. So things like the recent EU AI Act is extremely helpful because it builds trust in regulated AI, and crucially, it lets us use public data to train our models to make them more robust. And data obviously very critical for the performance of AI models. And we have to ensure that we get good AI regulation in the UK and the US and good quality implementation of the AI Act by member states, because we need these data flows to continue if we are to stay one step ahead of fraudsters. So AI and fraud are both an arms race, and the good guys also need the data flows to stay ahead, because the bad guys are clearly not playing within the parameters of prohibition of the law. That said, we see AI, of course, on one side, right, has been very much facilitating the production of fraud. But I think on the other side, it's also actually a significant part of the solution as well. And this is like what we call the responsible approach to AI. AI is not going to go away if you use it, but how you use it responsibly for the best impact. So the key features of responsible AI, which is common to all approaches, include things like bias mitigation. And actually, it's something with machines that you can measure at scale in a way that actually is incredibly difficult with humans. Transparency on how AI is used, both for the customers and also for the end users and consumers. Explainability, and explaining how the model works, not just a black box and the model has like spat out an answer. And then the last thing we were talking before about responsible data use, and also all the data protection and security around that. So these are the essential components of responsible AI. And the regulation must trade off the complexities of compliance with the agility to be able to keep up with bad actors in the system. So a lot of very interesting things going on in this space for sure, and we'll see how things evolve over the next actually months and year.
Yeah, very much so. I think one thing, this isn't necessarily specific to AI models, but to get a better understanding of regulatory expectations and where things might be headed, I always recommend to people that they read the supervisory guidance on model risk management, which was published by the OCC in the United States. One trend I've certainly seen in the bigger UK banks is new teams starting to appear in their compliance functions, which have titles like model risk team. And I definitely think history has shown that what the big banks do in terms of their compliance frameworks tends to sort of trickle down to their smaller peers over time. So we talk a lot with our client base about what a good model risk management approach looks like. And even in the sort of year and a half that I've been at ComplyAdvantage, I've seen more incoming inquiries about exactly this kind of question. You know, how do you ensure explainability and how you can sort of marry up your model risk management approach to your data governance approach. So yeah, I feel like the ground's shifting beneath our feet on this issue. It's one that I think all financial institutions should be watching quite closely.
Absolutely. Model governance, AI governance, data governance, governance across the board, all of this is necessary and evolving. So gosh, what a very information-filled 30 minutes. We can open up for a few questions from the audience, and which you should ask using the questions button on the toolbar. So if you see the bottom of Zoom, there's a questions. And then additionally, you can find the reports which we referenced in the references button in the chat. The links are already in there.
Yes.
Yeah, thank you. A great question on resources. So if you go in the chat, there's a references button. But also I think, yeah, perfect. So I don't actually see
stats on fraud monies you have saved. That's a great question. I don't know if that's directed at us or yourselves, Yulin. We don't typically tend to get those data points from our clients. For various reasons, they don't always like to share things like that. So yeah, I haven't got a nice data point I can just trot out for you, unfortunately.
From our side, I think from using the standard average fraud data and linking up with the amount of fraud that we actually now see on an annual basis across our clients, the number is in the billions, which is not a surprise because fraud is a huge industry. Yeah, when they say the TAM for fraud prevention is in the billions and billions, I genuinely do believe that. Great. Yeah, if we no more questions, as far as I can tell, let me just refresh the Q&A. Perfect. Then let's let's wrap up. Should you need any additional information on identity verification or what we do here, please reach out to an Onfido specialist at onfido.com and just click the contact us button. And then from the ComplyAdvantage side, Ian.
Yes, absolutely. So there's a few ways you can contact us. If you're interested in a demonstration, you can just go on our homepage, ComplyAdvantage.com, and there's a link to request a demo there. If you've got a general inquiry, you can email contact@ComplyAdvantage.com. And also, please do follow me on LinkedIn. We often publish think pieces on the kinds of subjects that we've talked about today and many others as well.
Definitely worth reading the fraud reports. So interesting. Both fraud reports. Obviously I've read ours, but reading this was really interesting as well. So brilliant. Well, thank you everyone for attending today, and hope you have a great rest of the day.
Thanks all.